What are the VIX, SPY, QQQ, and many other charts saying about the health of the market and where it's likely to head from here? On Tuesday, April 1st, we've got the JOLTS job openings data, followed by Trump tariffs, aka Liberation Day on Wednesday, and then non-farm payroll and the unemployment rate on Friday. This week is likely to be volatile. Join me as we try to predict the market's next direction. Nothing I share is financial advice, and you should always consult a licensed financial advisor before making any financial decisions. Looking at SPY on the 4-hour, when we took a measured move from the beginning of this rising wedge and we drag it over here, we can see that, technically speaking, the pattern has already played out after hitting this supply zone just above the 38.2% Fibonacci retracement. And you can interpret this one of two different ways. Either SPY had a false breakdown on Friday, March 21st, or there's the possibility that we actually have a slightly lower trend line right here. But remember though, there can always be nested, aka patterns within patterns. So what does this mean? If the market stops here around 553.50, it would represent a higher low on the daily time frame, and the market could at least go back up and retest this key level about 565 here in blue. And if it could break above that, the next key level is around 573. Alternatively though, this represents the second time that the market has pushed below that key support level, and the measured move from the higher time frame rising wedge that we keep covering is still around 524. Granted, there's so much support in this area, I wouldn't be surprised if SPY stopped around 541 at this ascending support line here in orange, and it's unlikely to go below about 530 if it touches this even longer running support line here in light gray, which actually goes all the way back to the COVID lows. And if we throw up our moving averages and the Ichimoku cloud, we can even see how on the weekly time frame, that would place SPY deeply into strong support on the Ichimoku cloud. As long as support holds there, I could see a strong rally to the upside coming off of this level. We've got something similar that happened on QQQ. Looking on the 4-hour time frame, price hit this 38.2% Fibonacci retracement and rejected almost perfectly off of that around 494. And the market has moved beyond the targeted breakdown for this rising wedge if we took a measured move from here and drag it over, as you can see here. But if this is actually a massive bear flag of the giant rising wedge pattern that we've been covering, then QQQ is still headed to around 430, which also lines up perfectly with this strong demand zone between about 420 to 430. And same as on SPY, if we throw up our indicators, we've got our moving averages here, we've got our Bollinger Bands there, and the Ichimoku cloud here. A drop to this level would place it deeply into Ichimoku cloud support on the weekly time frame, as well as right around this 100-week simple moving average around 437. And like I've said before, moving averages often act like magnets, so we could actually overshoot that moving average a little bit, and then it could act as support to draw this back up. And if we get down into this level, this is exactly where I would be looking to close any longer dated puts and probably any VIX calls as well. I covered NVIDIA in depth in my previous videos, but one thing that I want to just keep pointing out is this RSI falling wedge on the weekly time frame. I'm keeping in the back of my mind that if this plays out, strength on NVIDIA's chart is going to break out pretty aggressively. So you have to keep that in mind if you're holding shorts and the leader of the AI bubble begins to break out. And we can see right here, strength on the RSI is getting very close to this lower support line and oversold condition. And just real quick, I want to mention that I don't cover Bitcoin in every video, but I've already given pattern targets on it and where it's likely headed in the weeks to come in the video linked above. I've covered IWM more in depth in my past two videos, but as a quick update, so long as price is below the previous strong bullish channel here in orange and below the previous demand zone between about 209 to 215 and below this key level of about 212, it's kind of hard to be bullish on IWM, and I would expect rallies to be met with selling pressure. IWM hit this key level of between about 199 to 200 even, and as expected, we did get this dead cat bounce that went right back up into what is obviously now acting as supply. This used to be previous demand. When I throw up my indicators, you can see that IWM is well below both the 50 here in light purple and the 200-day simple moving averages. And there was a death cross on March 20th. If this key support of 199 to 200 breaks, the next support levels aren't until around 191, followed by around 187. And we can also see how IWM is below the Ichimoku cloud on the daily time frame, and the Bollinger Bands right now are actually contracting, indicating that it's likely about to either break up or down pretty aggressively. As you can see, however, if IWM gets that low, it'll be moving further into bear territory, placing it below this Ichimoku cloud on the weekly time frame, but also well into oversold territory and likely due for a bounce. I suppose the saving grace is that monthly time frame support for IWM begins at that lower weekly support level and extends all the way down to about 171. Back to the 4-hour, if IWM can push off of this support area around 200 even instead, I could see it try to retest the cloud around 202.40 and possibly up to about 204.40, which is actually the baseline of the Ichimoku cloud on the 4-hour time frame. If this is your first time watching one of my videos, I just want to quickly mention that I've been uncovering and sharing key market structures, patterns, and economic outlooks for months, and all of my videos string together. To get the full picture, you really need to watch the last few videos at least, and if you find that my content is helpful, please consider liking, sharing, subscribing, and tapping for notifications so you won't miss any more market-moving insights. We're almost up to 2,000 subscribers, so can we get there soon? And I also share posts throughout the week on StockTwits, X, and the YouTube community tab, so feel free to follow me on social. Looking at the VIX on the daily time frame, I want you to pay attention because this is very important. From the initial peak on August 5th, 2024 to the breakout on February 21st, 2025 is 200 days. And a conservative target for most patterns to play out is roughly 1/3 of the time that it took for the whole pattern to actually set up. So 1/3 of 200 would be roughly 67 days from breakout, or Tuesday, April 29th, where I've dragged the pattern target over. And sometimes patterns can take shorter or longer to play out, but that's a rough estimate of when this could actually play out if it's going to. So basically, within a month, there's the potential that this breaks out and hits about 67 based on a measured move. If this multi-year resistance line here in dark red holds up and it forces the VIX back down, there's the possibility that VIX will retest its previous support line of the descending triangle, which would be between about 1260 and 1550. And then if that acts as support, we may still see the VIX push up to quote-unquote only about 63. Taking a quick look at Dixie, the dollar strength index on the daily time frame, it's currently stuck between a rock, which is about 103.50, and a hard place, which is around 104.90 to 105 even. And although it is pulling back, the RSI is moving towards this oversold condition pretty quickly, indicating that it may actually be trying to form a base and still try to fill that gap up to about 105.50 and possibly all the way back up to about 107.50. And if you think that isn't possible, let's quickly take a zoomed out look. Look how thick the Ichimoku cloud is on the monthly time frame, and it shows very strong support all the way down to about 102 even. And the 50-month simple moving average in light purple is curling up, and it's likely to meet that roughly 102 area soon. So in other words, even if Dixie pushes that low, it's very likely to reverse from there, or at minimum have a pretty sizable dead cat bounce. I shared a little known chart pattern on Dixie in my last video, linked above if you're interested. There isn't a lot of clear structure that appears to be forming on the ADD, the market breadth indicator, but we had a very clear double top of the overall market here, and it's currently now back below this strong resistance line in red and appears to be using it as resistance as the market tried to retest it here. And this is the same resistance line that was forcing the whole market down until we got that breakout on March 14th, which coincided with the breakout of SPY and QQQ from both of their bearish channels. Anytime the ADD gets down to this negative 2,000 mark, it usually bounces though, except for where there is extreme fear in the markets. And if we zoom out to the daily time frame, we can see that that doesn't happen very often compared to the overall market movements. It basically always wicks below. So the ADD is telling us that we're likely to at least have a small bounce next week, possibly followed by further selling if this resistance line is back in business. This week we've got a requested ticker, Home Depot. There is a supply zone between about 397 to the current all-time high around 439. And we can see how price rejected very sharply back in January of 2022, but then hit this demand zone that's between about 263 to 297. And it also showed bullish action when it touched this demand zone between about 324 to 348. And the monthly RSI is getting pretty close to being oversold as well, showing it could be about to form a bottom. The weekly RSI is already in oversold condition and appears to be near the bottom of its bearish channel on the RSI. And you got to remember that bear channels always eventually break out to the upside. But on the daily time frame, something I have to point out, if you haven't noticed it already, is this pretty obvious head and shoulders pattern right here. And when we take a measured move from the head to the neckline, it indicates that Home Depot should at least be heading down to about 319 in the months to come, also placing it below this demand zone, which potentially could flip into supply. And that's pretty bearish. And if we look left, it's pretty obvious that there is a fair value gap down to about 315. And there's an actual daily gap between 289.93 and 300.14. And the market may be moving to try to fill those gaps before pushing further up. For the bullish argument, after hitting this demand zone and bouncing from about 346, Home Depot may be heading back up to retest this previous neckline of the head and shoulders pattern around 376 to confirm whether or not it's really resistance. And it would have to break and hold above that line for further continuation to the upside, and then ultimately have to contend with this strong supply zone on the monthly time frame. So at least medium term, I think Home Depot is likely to head lower. Stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.